What's up YouTube? Welcome back to my channel. For those of you that don't know me, hi, my name is Miguel and I'm actually building a $100,000 dividend investment portfolio for passive income while I'm also answering y'all's questions along the way. Of course, it's the beginning of the month, so we gotta go over all the passive income that I made from this portfolio, updating y'all every single month, every single week on my buys, and how well I'm building this passive income portfolio. Before we get into that, don't forget to subscribe to the channel if you have not already. Leave a like on the video because it does help out the growth of my channel tremendously. And then comment how much money your portfolio made this week. I love interacting with y'all and seeing how much money y'all's portfolio made over the last month as well. It helps encourage me to continue to invest consistently every single week, every single month, and every single year. That's the only way that we're going to be able to build this passive income portfolio together. So don't forget to do that, and let's roll the intro. Now, as always, before we get into the meat and potatoes of this video, we have to go over my portfolio value for the week as well as all the buys that I did do for the week. As it currently stands, the market is still open and I'm currently at $14,226.37. On the day, I am down $28 or about 0.2%. On the week, I am up $122.86 or about 0.87%. On the month, I am down $499.61 or about 3.39%. On the 3 months, I am down $12.68 or about 0.09%. And then on the year, I am up $1,553.26, up overall about 12.25%. And then on the year, I am up $2,077.92, currently at a value of about 17.10%. Again, like I talked about last video, I am not scared of my portfolio going down in value. It gives me the opportunity to buy the dip, bring down my dollar cost average, which is ultimately going to give me more dividends at a cheaper price. And as we talked about last video, I'm looking to consistently invest every single week, so it's like a straight line up, rather than follow the trends of the market and buy high and sell low, ultimately losing you money. Now going into the purchase that I did do for this week, I bought $100 worth of Target. I bought that $100 worth of Target at an average cost of $219.34 per share, ultimately giving me 0.45 shares. As we can see, hopping into Target, I now have 4.53 shares. That's an average cost of $229.22. I am down overall about $72 or about 7%. I'm not too worried about this. I know Target is a long-term hold for me personally. This is the biggest loser in my portfolio currently. It doesn't scare me at all. I want to hold this long term. I want to continue to put more money back into Target so I can bring down my dollar cost average, continue to get paid those sweet dividends, and ultimately be positive in Target when they do go back up. Because as we can see, going into the last 5 years, they're up overall about $150 or about 234%. I know that I did take a big gamble buying in when they're relatively high, and I am paying the price for that now, but just like with Hormel Foods, over the last entire year, buying more shares of Hormel Foods over and over and over again, being negative essentially all year until just last month they went back up to where they were supposed to be or their fair value, and now I am positive. So I'm not too worried about Target. I'm going to continue to put more money in so that way when they do go back up to their fair value price, I am going to be positive and getting paid more dividends for a cheaper price. Now hopping into all the dividend payments that I got for the month of January 2022, I got a total of 9 dividend payments, with the first one being from MRK. As we can see, I had 14.56 shares at the time and they were paying about 69 cents per share, giving me that $10.05. Hopping into MRK, as we can see, I now have 15.56 shares at an average cost of $77.22. I am up overall about $25 or about 2%. This is the highest holding in my portfolio. They do pay quarterly dividends. I took a big risk on them just like I do with a lot of the stocks that I believe in. I buy the dip and I was negative on this a lot last year. And as we can see, we are positive, but the most important thing out of this is that I continue to buy the dip, which gave me more dividends for a cheaper price. And as we can see, it has paid off, but I am going to hold off on buying more shares of MRK until my Microsoft, Apple, Target, Costco, all of the other main shares in my portfolio go back up to this value. The second dividend payment that I got for this month was from AG&C. I had 14.53 shares at the time and they were paying about 12 cents per share, giving me that $1.74. As we can see, hopping into AG&C, I still have that 14.53 shares at an average cost of $15.31. I am down overall about $16 or about 7%. AG&C is one of those risky high paying dividend stocks that, as we can see, is less than 2% of my entire portfolio, which is okay with me. They do consistently pay this monthly dividend out, and they have been for the past year and a half for me, so I'm pretty happy with it. But ultimately, I have been paid more in dividends from this company than I am negative currently. I personally think they're going to continue to float around this price range for the next couple of years. They won't go up or down too hard, hopefully. but I'm going to continue to hold on because, like I said, they are less than 2% of my entire portfolio and I'm comfortable with this risk. Now, the third dividend payment that I got for this month was from Pembina. At the time I had 10 shares and they were paying about 14.2 cents per share, giving me $1.42. And as you can see, they are still withholding a dividend. Hopefully they can reinstate that dividend soon, or just lower their dividend yield so they don't have to take away dividend. Either way, it's completely fine with me because looking into Pembina, I still have 10 shares at an average cost of $25.58. I'm up overall about $70 or about 27% on Pembina, and they are relatively low in my portfolio. I did want to continue to buy more Pembina, but as they started to withhold dividends, I want to wait to see if they can reinstate those dividends before I invest any more money back into Pembina. So far, a great return, and I'm still getting paid consistent dividends, even though they are taking some dividends out. It's a risk I'm willing to take just to see how they turn out over the next year. The next dividend payment that I got was from Realty Income. I had 14 shares at the time and they were paying 24 cents per share, giving me that $3.45. I still have 14 shares and that's an average cost of $60.32. As we can see, I'm up overall $113.70 or about 13%. Realty Income is one of the best investments I have ever made. They consistently paid this monthly dividend out to me every single time for the past year and a half that I have owned it. I'm extremely happy with this investment. I do want to put more money in, but at the moment I'm still focused on building my foundation with Target, Costco, Microsoft, and Apple. But still, an amazing stock that I first invested into, and I'm not mad at all about my return from them. The next dividend payment that I got was from Main Street Capital. At the time I had 10 shares and they were paying 21 cents per share, giving me that $2.15. Going into Main Street Capital, I still have that 10 shares. That's at an average cost of $36.40. I am up overall about $71 or about 19%. Another amazing company that I have invested into that I wish I put more money into because I have had a great return and they consistently pay this dividend out to me. And they have consistently paid this dividend out to me for the past year that I have owned it. So I really am looking for an opportunity to buy more Main Street Capital. For the time being, I'm really happy with this position. The next dividend payment that I got was from Main Street Capital. At the time, I had 26.37 shares, and they were paying about $6 per share, giving me $1.58. I still have that 26.37 shares at an average cost of $6.15. I am up overall about $57 or about 35%. This is another risky, high-paying dividend stock in my portfolio. Of course, as we can see, less than 2%. Because that is what I'm comfortable with in the risk factor of my portfolio. But Prospect Capital has not disappointed me yet. They're consistently paying me that $1.58 and they have so over the past year and a half, just like with AG&C. The only difference is I am positive with Prospect Capital. I guess that's kind of how it goes. I have two risky stocks, one is negative, one is positive. I guess that's kind of the flip of the coin when it comes to high yielding dividend stocks, especially the ones that pay monthly and especially the ones that are above a 7% dividend yield. And the next dividend payment that I got was from Chase Bank. At the time I had 3.06 shares and they were paying about $1 per share, giving me $3.07. As we can see, going into Chase Bank, I still have that 3.06 shares at an average cost of $134.41. I am up overall about $50 or about 12% on Chase Bank. This is the stock that I want to be the main stock in my finance sector of my portfolio, but this is another stock that I want to build up to around $1,000. I am comfortable making this about 6% of my entire portfolio. Hopefully I can do that soon, but for the time being, I am just going to collect sweet dividends from them and also getting a little bit of a profit. The next dividend payment that I got was from SPHD. At the time I had 14.46 shares and they're paying about 13 cents per share, giving me that $2.02. And as you can see, hopping into SPHD, I still have that 14.46 shares at an average cost of $34.66. I am up overall about $152.24 or about 30%. This is honestly what anyone would expect from an ETF. The benefit to this specific ETF though is that you get paid monthly dividends on top of the gains that you get. I think still one of my absolute favorite stocks in my portfolio ever besides Realty Income. At one point they were the main stock in my portfolio, now they're all the way down to about 4%. I think I am going to sell off out of my position in PEY to put back into SPHD to grow more of a holding in this ETF. And as we can see, PEY was the last and next dividend payment that I got in my portfolio. I had 10.94 shares at the time and they're paying about 7 cents per share, giving me 80 cents. As we can see, I still have the 10.94 shares at an average cost of $16.54. I'm up overall about $52 or about 28%. Still an amazing return from a similar ETF that pays monthly dividends. And that was all 9 dividend payments that I got for the month of January 2022. Adding all of that up, it's a grand total of $26.28. Not too bad for passive income, and this was a slow month. I'm going to have a big month next month, looking at about 13 dividend payments so far. But the main point of this portfolio is building steady passive income. And as we can see, just looking at 2021, this time last year, I only got paid $9.42. I am just about tripling the amount of money that I'm getting passively in this portfolio every single year. But for the time being, I'm just going to continue to be patient, consistently invest every single week. That is the only way that I'm going to get there. But that's all that I have for y'all this week. Thank y'all so much for watching. Don't forget to like the video because it helps out the growth of my channel. Comment how much money y'all made this month in passive income, or how much gains you made this month if you don't have a dividend portfolio. Either way, I love talking to y'all in the comments here and in the comments on my TikTok. And lastly, don't forget to subscribe to the channel. I will catch y'all next week. Peace.